There's a lot that goes into how a suburb's going to perform. I think that, of course, as an investor, you want capital growth, but then I think as a human being living in Australia, you want a situation where there is enough housing to support people. I think for me, my biggest concern on a daily basis is around the fact that we're not building anywhere near enough homes. Now, from a purely investor perspective, you could say that's a good thing because the value of assets, housing assets, is going to grow. But then, of course, you can say, well, actually, this is also going to cause issues in our society as well. So it's a real, mix of things, and depending on your perspective, uh, the market is very good right now, or it's presenting challenges.
You just mentioned there a little bit of intel that you get from the data. As a property economist, are you at the peak um, lake of data? And I know you're going to put your REA hat on, they pay the bills and say how great it is, but is it the network effect of the reach that REA has compared to, say, like Domain, who's quite strong in New South Wales, but not compared to the rest of the country? Is that rich data able, as an economist, are you sort of at the pinnacle spot for property? Because not only are you getting lag data, but you just mentioned
Mm,
some lead data there as well. So
yes.
is it, what sort of insights are you getting, just because you're at the coalface of clicks?
Well, I think that what you mentioned, lead data, that's really what I find most engaging, because we can see what people are looking for today. We can look over the whole suite of product that we have on the website, how many people are searching for different kinds of properties. We can see where people are looking, and also, you know, on realestate.com and Domain, whatever, we advertise the properties that are newly developed. So we advertise new development sites. So we can see how many new homes are upcoming as well, and what that product is. And what we're seeing at the moment, actually, that's quite fascinating, is a huge mismatch between the kinds of properties that are being developed in the market versus what people are looking to buy. It's particularly the case in the apartment market. And going back to what you were mentioning earlier about long-term trends, over the long term, apartments have really pretty significantly underperformed houses for capital growth. But we're in an interesting period now where, because it's so expensive for developers to build new apartments, what they're doing is, so that their projects are profitable, they're building premium apartments. So over half our new developed apartment listings are valued at $1 million or above at the moment. But we know that the vast majority of people who are searching on realestate.com to buy an apartment are actually still looking at around that $400,000 level. So when we look at, Australian Bureau of Statistics data like dwelling approvals and all of that, I think it gives an overly positive indication of what upcoming supply is going to be, because unfortunately, we're not really delivering enough new housing at that more affordable end.
Mm.
And in terms of that online search interest spike that you saw after the rate cut, was that consistent across all capitals, or was there a certainly noticeable level in some markets over others?
I actually haven't looked at that data by state.
Okay.
I would imagine that it would be universal, though.
Yeah.
The magnitude of the spike we saw would be reasonable to assume that we did see a spike in every state.
Okay. So let's pick up on that mismatch message that you just shared with us before. I mean, obviously there has also been a trend, as investors get more and more educated about potentially off the plan and the risks of buying those types of stocks in a homogenous, the risk of oversupply and lack of capital growth in those areas. Do you think the part of the building the premium, or building to suit the owner occupied purchaser, maybe with the third bedroom or whatever it is going to be part of that density story that we see evolving in areas like Melbourne and sort of less so Sydney, because we know the density is quite strong there. But in, say, the Melbournes and the Brisbanes and the Perths around the place, are you seeing more of that type of positioning in market, even though the consumer's telling us we're not quite there yet in terms of wanting it?
Mm. I mean, over the longer term, that's, I think, what will happen. At the moment, most of these projects are being sort of targeted towards downsizing baby boomers. But over the long term, as we see the cost of housing continue to rise, we're probably going to see more households such as young families instead starting to look to buy these larger units. And we have already seen this, particularly in a market like Sydney. It's normal for a young family to live in an apartment. Whereas in a lot of the other capitals where the cost of housing is still lower, that's still not really front of mind for a lot of people. It's sort of a last resort. They want the house with the backyard. But we know that expectations change over time as price points get more and more out of reach. So I think certainly a lot of this new larger apartment stock that's being built at the moment could eventually be, purchased by those younger families as opposed to the sort of downsizing baby boomers that are really the key target for a lot of these developers at the moment.
And I've heard this sort of quote missing middle. Do you believe that this sort of falls into that missing middle of the types of stock that we think the marketplace needs? So I know that there's a lot of conversations around medium densities to 3 levels that's consistent with the sort of local environment in which they're building in. Is this missing middle sort of stock that we're going to see coming to market over the next decade or so?
Not yet. I think what we're seeing in terms of new housing development is sort of higher end premium developments in inner city areas and
Yep.
then house and land estates much further away from capital cities. We're not seeing too much at the moment in our middle ring suburbs. Uh, and I think until the equation changes, it's either cheaper to develop, which is unlikely to happen, or home prices rise enough that it justifies the cost of that development. We're probably not going to see the sort of growth in development in our middle rings that we really need to see.